Good morning. Well, I guess the question is, are we ready for new all-time highs here in the S&P 500? Is it going to play that catch-up and drag those junk stocks that were reviewed at the end of the day yesterday up with it? So far, things are playing out. I still have the internals up here as to what we've been talking about lately with the breadth, which is this line down here, lagging, and which is really a reflection of what we know, that a lot of stocks have been lagging the technology stocks. So yesterday was, sometimes we refer to it as a frog in a blender day. Very choppy, erratic, makes a move in one direction, fails, makes a move in the other direction, fails. So it was, the gap up and the run up. The futures gapped up. You can see the gap right here, which is unusual because they only stop trading for a little while, after the market closes, and then they start trading again. And so they had gapped higher when they started trading again. Day before, yesterday, after the market closed there, day before yesterday, they gapped up, and then where they opened there and then pushed higher yesterday morning up into this resistance. So, the run that occurred here and then the gap and then a little bit of a move that it had, I guess, was too much too fast, and then turned into be a choppy consolidation day. So now futures are backing off a little bit. Maybe they fill the gap here. We'll see. If they don't fill this gap and they just hold here, that really could be poised for the move tomorrow, to new all-time highs. Excuse me. Now we have, a fly in the ointment, so to speak, and that sentiment is just up here, going to the moon. Now, of course, it could go higher like it did here, until, breath catches up, and then assuming it, that's what happens, and we get the break to new all-time highs. I'm speaking, George. And we get the break to new all-time highs. Breath will push up into the bearish zone. Obviously, this will, I would assume, continues to push up, but it's already up into the bullish zone. So already there, it doesn't matter at this point. And then once we have agreement, like we did here, that was the sell signal. And the correction did occur, was the big gap down in the move, and then, then other gap and, retest pattern. And so here we are. And there's been a lot of choppy price action over the course of the last month and a half or so. Pretty erratic price action, other than, those tech stocks that have been in favor, which have gone up. And so maybe they will lag a bit while these play catch up. As I said, we reviewed a lot of stocks yesterday that look like they're going to play catch up, decent bottoming type of patterns, in those stocks that were crushed. So we call it catch up. You can call it sector rotation, whatever, whatever's been leading the way up, money starts to come out of that to some extent, profit taking, and flows into the beaten down ones. That happens a lot. And it's one of the ways to utilize that information is if a particular sector, say semiconductors, are doing well. And, the leaders within the sector, they've been going higher and higher. And so, they get extended, however you want to measure extended. And then the ones within that sector, money starts to flow into them and they play catch up. And, as they go higher, historically, that's where the sector then goes through a larger correction. So, and that could be what plays out in the market as well, where, prices have been going up since the Corona crash bottom. And then we see, the stocks playing catch up. And then at that point, maybe the market goes through some type of bigger correction. We'll just see how it all plays out. All right, so let's see. Just showing you here, this is day-to-day breath. This one down here, and it was great yesterday, but it went nowhere because, you know, as I said, the run up the prior day and then the gap up. So while breadth was good, the market didn't go higher. And so consolidation day, maybe distribution. It's kind of hard, to pinpoint it, but right now the pattern is bullish. So we'll just have to see what kind of follow through happens. And if this goes sideways for, we'll just say today's another chop day, and then tomorrow it moves higher, well, that would be bullish in alignment with what's happening here. That giant bottoming tail being ignored can only be construed as being bullish. Now, the wrong way option traders, they're betting this thing's going to pop. So look, I don't know. You never know what expirations are trading. This market internal gauge doesn't tell us that. It just say day to day what's going on here. So to see them buying all of these calls makes total sense. That it puts a cap on the market, even for a day or two or three. And so that's how we use the those internals. Qs, you know, they got extended. You had the faster run here, right? So that's a tell. When you have prices running like that, whereas, here they had a bit of a run and it came in. And I don't know what the symbol is, trader, and that's not the symbol at all in e-signal. You have the in one of the websites. When I'm off here, I'll give you the link. There's a link to a free website, and you can see which one it is. It matches up perfectly. Robbie is asking me, Greg, the volume is extremely low, at least for me, compared with other websites. Saying how I'm speaking? I don't know. I don't know. Maybe you have something in the right ear. I don't know. I look into. I don't know if there's some new settings in Zoom. They've been doing a lot of changes lately and upgrades. Sound mic. It's on the right microphone. Microphone. Adjust volume. Let's see what happens here. Automatically adjust volume. All right. I just clicked on something. I don't know what that did, but there was an option there that automatically adjusts volume. And I just turned it off and pushed it up to the max. All right. Okay. All right. So glad you said something. I saw there was some little adjustment there. So this run up, right? You remember last week I talked about the wide range bar and how that historically signals a slowing in momentum. I also said at the time that doesn't mean it's got to pull back. Momentum means just stopping the advance, with the speed at which it was going, and that happened. Topping tail, small candle body, within the same range, and it went up, and then we had the gap and run up and back down. So now it's consolidating, correcting, so far sideways. Now this, right, I've got minor support here. This line, let's just throw it up here for now. Minor support, major support. So our systematic trend analysis as such, it says major support's down here. So we look at trend analysis now. Nothing to do with Fibonacci or Elliott waves or any of that hocus pocus. It's just that this is major support, and you had a run up, which has created a void below. This is minor support, right? That's the high that it cleared. Major support, the low prior to the higher high. So now it's consolidating. It's choppy, but it's still in an uptrend. So we're giving the benefit of the doubt to otherwise, but this definitely tells us be careful, right? When you see a run and volatility, meaning whippy price action, like this is going to be whipsaws, right? Until it calms down. And it calms down by the ranges returning back to what was previously the normal ranges, and the tails and gaps start to go away. So it's just what we're dealing with right now. This is at new all-time highs. It's in an uptrend on the weekly, and as you can see here, see over here. Obviously, you do PL, PH, PL. There's no PL, PH over here because this run has been so strong on the weekly time frame that there are no pivots, which is an indication and confirmation of the strength. And over here, you have pivot highs and pivot lows. It's in an uptrend. However, you want to measure things with something more esoteric from your toolbox, just this simple concept of making higher highs and higher lows. It's in an uptrend until proven otherwise, but this acceleration has now created an issue, meaning too far, too fast. It's got to correct a bit. And that's what we're dealing with right now. So it's going to be choppy until that happens. So bringing up the rear, what is that? Well, the S&P could go to new all-time highs. Maybe, this correction that's happening today, you can see here there's a void below. And that said, this should not come all the way back down here. Right? So I'll just drag that down here for reference. So when you have a pattern like this, right, we talked about this earlier in the week, and I think the end of last week, when you have this pattern, you can say it's a head and shoulders bottom, and now it's cleared the neckline, call it whatever you want. It went down, bottom, buyer stepped up. You had a 2-bar reversal, and you had a 2-bar reversal of bottoming tail bars. Who cares what it's called? It broke out, right? The topping tail was ignored, wide range bar. So it should not come back down here. Now our factory work says it should stay in the upper half of that bar. And so any kind of corrective action here is normal and still bullish for this to push higher. And our internals say, based on breadth, that is a possibility. And sentiment maybe just backs off a little bit through this chop. This is all about reading the tea leaves. As I'm explaining here, is to get a bias as to what is probably going to happen, as well as to keep us out of the mess while it is happening. All right, Russell, the other laggard. Right? It had the explosive day up. It cleared the highs, closed above it. Same kind of bottoming price action here. It's got a void to go up. I know it's too early in the day, but it's the beginnings of a 1, 2, 3 continuation pattern. Possibly, if it's just an inside day today. And that's what we talked about in MT Live yesterday. You should have the replay in your inbox. And if that's the case, well, then if we get that, then a trade above that bar's high is a buy, and we look for it to go higher. Okay. We got bonds up here a little bit, right? Market's down a little bit, bonds go up a little bit, and that's the way it's been lately. It's dealing with all of that overhead resistance. So the expectation is that it's probably not going to move up a whole heck of a lot, and possibly, so far it's ignoring that bottoming tail, but possibly it could roll over. Right now it's one of those patterns that says stay away, kind of similar to what equities are telling us. That doesn't mean individual stocks won't have plays, but these kind of patterns are really suggesting from this time frame, stay away. And there you go. Here's another stay away pattern. Maybe it's going to break out, but oil has just been going nowhere now for about 2 months, right? After the push up, right? And just going sideways. So, based on the weekly and the move up that cleared this high, right? Downtrend, retracement over major resistance. It's no longer in a downtrend. Sideways after a run up, right? The void's creating support, but it hasn't been able to break out yet. So set an alert, watch, or just let the computer watch it. Gold's choppy, but still looks like it's going to go higher. Look at the weekly. We know it's at some resistance here, but it's holding up. Had this consolidation, that 2-bar 180 reversal. Still looks okay, but it's erratic like everything else. Silver. Now look at the arrangement of these bars compared to the others that we've been looking at. There's more certainty. Look at how it's moving up. Wide bar up. Bodies at the top. Wide bar up with a tail on the top, but prices keep churning higher. Now today, it's stalling. It's near 20 bucks. Right? It's a kind of a psychological resistance point of a whole number of 20 bucks. So maybe it's stalled there. That topping tail is actually in the same area. So I got something real there as far as price as well as the $20. So it makes sense that it's stalled right there. But notice that bottoming tail bar. Right? It broke through the lows and came up. Nice little buy signal there. All right, transports. Right, they had a good day yesterday. They couldn't get much further. But transports, some of them have done well, and some of them look like they could be bringing up the rear next week. So more on that to come. And so, what are we going into this day market-wise? So far, it looks like it could be an SOH day. Sit on your hands, so or choppy action. We'll see what individual stocks are moving around here. So, all yours, Dan.
All right, good morning. Yeah, we have a bunch of opens in both letters. Things are gapping down a little bit against us, but I don't see any problem, children. Tehran, excellent question, and so let me answer that for you. But yeah, we added a bunch of put spreads yesterday afternoon when we were scanning the beaten down sectors, restaurants, cruise ships, airlines, and they're gapping down a little bit here, but we just did put spreads. We didn't do directionals. So Tehran's asking me, she's saying, hey, I thought you all taught me yesterday that your stop is over the high of the wide range bar. That is a true statement. So now let me tell you what I did. The more inside bars I have, I'm willing to make it tighter. And then secondly, I use pivots. I use pivots and retracement concepts to make it a tighter stop. So if this trades under this big old trading range, trades down, I put my stop over this pivot right here. So that's just eyeballing. That's a little greater than 50% retracement. So I told myself, if this trades under these 2 bars lows, it shouldn't then have a false breakdown and go 50% into that bar. So that is the answer to your question. Abbott here had earnings yesterday, but beautiful, beautiful multi-month consolidation. An MT live, we were talking about moving average analysis also. And here's a great example. Although the 200's like barely rising, you can see these moving average here, they turned up. The fact that they've both been going sideways without even looking at the candlesticks, it's telling me it's in a big consolidation. Now the 20 is breaking out above the 50. That's telling me it's finally starting to break out. And that's what the candlesticks tell us. Yesterday was a beautiful gap breakout day. I don't know if it had earnings before or after the market, but it looks great. It's a bull flag here on the weekly. Look, that is a absolute textbook bull flag. Do you remember the MT live we had? Here's your flagpole. We want a counter trend channel consolidation at, just eyeballing it, roughly 30 degree retracement. And now it's breaking out. This is a big old downside shakeout. So daily, weekly, look fantastic on Abbott. And you know, McGraw, you said a comment. You made a comment about, oh, these other ones had blowout earnings too, so they're going to go up. Abbott is superior to this pattern. So just, McGraw, you've been trading for decades and you've been around us long enough. You know that I don't care two hoots about their earnings. Up, down, sideways, I don't care what you did on your report card. So this, it's a red bar after 4 up days at resistance. I have zero interest in Johnson & Johnson. And you said TSM. I have zero interest in this. Why? It's a climactic sell setup, far from the 20. And it's actually down. So if I did have any interest, it would only be to sell an out of the money call spread. But I have zero interest in buying that thing. Just like we said with Netflix, I was hoping that it made a big run like this into earnings, because then I would have been bearish the next day. But now it's kind of neutral. So now I can't really make any prediction whatsoever on earnings. Let's continue with gappers here. 76.50, it's a bear gap down. That's a candidate for a call spread. Here's gapping down. No great pattern. I mean, you might get a day trade short. I don't know. $8. That was a W bottom. That's not a textbook one because of this gap, but the W formation, time symmetry, that's a W. But nothing to do with it now. Gapping up 973. So this was a bullish trading range, at the trading range after this big move, and it's gapping up. Look, there was a double bottom. Talking about double bottoms. Look at that. It's a double bottom on the monthly. I mean, typically I like the momentum to come down a little faster, the angle for a W bottom, but I still call that a W bottom. And notice the dot down here, you're showing the entire desktop. Okay. All right, thanks. Let me fix that.
Hey, Dan, just for a second.
Yep.
Is George, am I coming through any differently now? Okay. I changed my mic setting yesterday because we were doing this thing on YouTube and Dan was coming through my speaker. So I turned the mic on so that it would take it from the front and the back.
All right. So look here. Here's actually, now see, this is a better M top with a lower high, because see, this one is a better fluid move. So now that I spread this out, but it made a new low. So that was a great place to do intelligent bottom fishing as a core trade down there on DVAX, but he's worth watching. This little guy gapping up, looks like he's been a recent toy. LCI gapping up. Now this was another no-brainer short right here. No-brainer. And you also have the moving average alignment here, confirming it, consolidation into that, topping tail, which is an upside breakout failure. It's actually, if this bar closed at the high, that would have been a 1, 2, 3. But, and then yesterday's gap up is what we call a bull gap surprise from a climactic buy setup. Now, I don't know what to do with it. It's gapping too big. If it were only gapping to say 550, then I would say it has room, but it's gapping here. So that, 50% is usually my first target. So I got nothing to do with that. FIDX 1650, it's a bullish gap, but it's garbage, no interest. Wow, that was very tradable down here. Right on this day, on July 6th, that was tradable over the high of these 3 bars. Nothing to do with it now. Cisco got a downgrade. If it can get under, today's Thursday, if it can get under Tuesday's low, it would be a call spread. Oh, CCL, I read in the journal that they sold 4 of their ships to an undisclosed buyer. And secondly, they've even postponed some cruises to 2020. And I wonder if that's what's hurting the whole industry. We did a put spread on RCL, and that's actually that might be a day trade little scalp short right here. That's a bearish pre-market. Saudis. And I didn't know if McGraw decided to buy one so he could go manatee, check out the manatees on his cruise ship. OI gapping up. There's no volume, I can't tell, but if it gaps up to these prior highs and goes sideways, then maybe 30-minute high. AA had earnings. Downside shakeout and breakout. Nice weekly. Look, that's a little buy setup, cup and handle after a big move. Whenever I look at AA, just for habit, I look at FCX, which is copper, but both metals, of course. And I remember mentioning to people right here that was a good breakout. June 2nd. Wow. I think I might have said something like it's sloppy, but it's a reverse head and shoulders, target up here. And wow, it blew right past it. Yeah, space. Yep. CRC, I had earnings, no pattern. Hey, Tehran, are you old enough to remember that show, Lost in Space? I grew up with that. That was one of my favorites. Along with Gilligan's Island and, the Red Jetsons. All right, this was a beautiful downside shakeout. There was no price void, but excellent message. And that was a viable short. You did absolutely nothing wrong. That was a beautiful short right there. So if you're day trading, you would have trailed pivots and you'd be a happy camper. If you were swing trading, you would not be a happy camper. It's a 180 reversal. This thing gapping down. McGraw, call spread candidate, they had earnings. So call spread, the 55s and above would be good. Maybe 10, 15-minute low. Yeah, Lost in Space. That was a good one. All right, Abbott is a little sloppy now. So, that's why I put them in windows here and watch them. I don't do anything. Glancing at our opens to see if we have any problems on our hands. I mean, we did a put spread on some of these. If the weakness continues, then we will leg into condors. We did an added money put spread, but maybe 30-minute low, we might have to leg into a condor. Oh, FMD, we bought a half lot of this yesterday, and the other half is over yesterday's high. Boeing, that, I don't know. That is an ugly bar. Wow, I have no interest in that. IIIN, gap and crap, no interest. J&J had earnings. I already explained why I had no interest. Pizza, that's a bearish gap into the bar. So we always want to check his cousin. His cousin's holding better, much better. KHC, yep, that was a 1, 2, 3. I'm not buying anything though, Jason, with the market coming in. That's me. BMI, that's a put spread candidate. Look how many times it's tested. And look at, oh, look. BMI 60, 20 by $1. So, and then you go out the next month, 65 cents by $5. So maybe that's a pharmaceutical. He's a jerk. BAC, no interest. I don't like the way this trades, but it looks lower. Daily, weekly look lower. There's our Abbott I have on the other screen. Yeah, look at Dell. Dell is up. I guess they're wanting to, yeah, I have a day trade bias short right here for scalps.